So, good morning, everyone. Today we are going to look at FVGs and the ones to watch out for and the ones to be careful about. Because some FVGs tend to be valid, but we have the strong ones and we have the weak ones. Because most of us, likely, which I'm also a victim of, we just see FVG, any FVG we just see because we have seen that it's an imbalance, we just enter the trade and we tend not to differentiate between the two types of FVG. This is the first one, which is this opens above the previous candle. Like you can see here, if you look at this point, you see where this candle here opens. It opens above this previous candle. That's just immediately after this previous candle closed, it opened. So as you can see, this is a buy side FVG. This is a buy side FVG, as you can see it. So we can look at the second one over there. This candle opens within the body of the previous candle. As you can see, it opened within the body, which is it's opened. When the candle opened, it started pushing up from within the body of this previous candle. So what can our mind tell us about these two different candles? This one is showing momentum. Immediately after the candle closed, the next one pumped up, boom, and it took off. But what this other candle is showing us? This other candle is showing us that price was still struggling here. Instead of it to pump up immediately, the sellers were still in the market trying to push the market lower. That was what made this particular candle here get in between this area, because sellers still had more pressure to push price down, but buyers still tried to close above the previous candle. So it's still a go, because as you can see, you know that okay, what is your rule? The imbalance is there, which is the FVG. But what do you think about? Again, I want a strong FVG. I don't want an FVG that price will tend to maybe enter and will hit my SL. That's why I'm making this example, because sometimes you just feel like FVG is a good mode of entry. Why is it not failing for me? So it can fail for you if these two things are not put in place, because we are looking for perfect entry. Though no entry is perfect, but there are some strong entries you need to know. So that's when you hear when some people are like, I took 5 trades, I won 3 or I won 4. I just lost one of those trades. It's because they have followed rules, they have followed concepts that they made themselves or they were given to by their mentors. So I just said I should just run across to this video because of beginners that don't have time, because of you should have time to do research. If you want to become profitable, you should have time to sit down and check why this thing didn't work, why did this candle fail, why did this trade I took fail. I took time to check. That was why I knew that okay, there are two differences. One is stronger than one. So me placing this video out there, I will still try, which I will do, to go into the market to check out these two and show you where more of this worked and where less of this worked, so you can understand why I still stand by the fact that FVG has a strong FVG, and there is a weak FVG. This is an FVG, which is also directly, this is an order block space where you can mark out your order block or the FVG. So most times we tend to like say, okay, price might not get to the order block, it might get to the FVG first. Then you mark out your FVG and expect price to tap in and boom, go up. And then you get disappointed, which price actually disappointed us here. So what happened exactly is because there is no momentum. Momentum is not strong enough. Though there was a bullish candle here, followed by a bullish candle, as you can see here, but there was no momentum. Assuming there was another FVG here after this first FVG, assuming the candle above add another candle above. I don't know if you understand what I'm trying to say. Let me show you. Assuming there was a candle above this point where this is, I think there was a candle above showing a strong FVG, I would have said Okay, that's the FVG I'm going to mark. I'm not going to mark this. So let's go to the next so I don't waste much time, so we can continue with the video. So like you can see at this particular point, you can see the momentum here. You can see the momentum is strong here. This is where the other block was. The other block was here. I started seeing candle pumping. This is an FVG at this point. From here to here is an FVG. But we want an FVG where price react to faster. So this was the nearest FVG to where price was, which is this. So what did I do? Like I said in my previous video, I don't just put my entry at the top of the FVG. I put it at the middle part, which is here, at the middle part, and then put my SL probably here. So, and then my TP will be in the next zone, because this zone has been tapped already. As you can see, this supply zone here has been tapped already. So where is the next supply zone? Here. Then I put my TP here so that price will take out the supply zone before it reverses. So price went up, took out the supply zone and still came back, and I see some other supply zone here at this point. So that was why I put my TP here. So what the price will trace to the point, my point of entry as the middle of this, and price tapped and gave us a hour of almost just like 101 pips. Assume my SL was here, which I always put my SL. It should be below the FVG block, which is here. It should be below it a bit. That's just at 6 pips to get 101 pip. So that's what I'm just trying to show you. So let's get back into the video. Thank you. But still on still, both of them can still work depending on the situation of things. Both of them can still work very well, and even the perfect FVG can still fail. We're just trying to make sure that we picture out the stronger ones than the lesser ones. So I hope with this video I made, I've been able to open your minds to see how that when you try to take an FVG, you should put some kind of things into considerations before you place your trade, because while we are all trading, we need to like have enough capital, because there's some days that we tend to have good win rates, but if you don't have a capital to trade that very day, we are still going to lose. So we are trying to secure our capital so we don't take trades that aren't worth it. So I would like all of us, anyone who watched this video to this point, to try to go into his chart to also do some research on it, because we are here to pass knowledge. You can leave in the comment section which one worked for you more, or if you have any doubts or you have anything to say about this, saying this one is stronger to this one, you can say it on the comment section. We are all here to learn, but for my own research, I've seen that this is stronger to this. Thank you.